Hi there and welcome into this week's market update. Don't forget that any advice contained within this video is general only, so it isn't tailored to your particular circumstances and you need to decide for yourself whether it's appropriate to you. So the XJ closed slightly in the red today after being in the green for most of the day. We only actually kicked into the red on the last 10 minutes of trade. So basically we've come up and tested the 74 level once again. This is about the fourth or fifth attempt at this level now. But 73 is an absolute magnet for our market, so we keep getting drawn back to those levels. What I've noticed though in the most recent few weeks is that the momentum's starting to pick up again. So you can see through here, momentum was very, very small. Okay, each day's bar was very, very small, very, very whippy, and now we're starting to get big daily moves. Now when you bring that in close to the uptrend line here, you can see that we're starting to argue a case of a breakout soon. Alright, so we've tested trend after a big pullback. We're now shooting back up near resistance and we're just really waiting to see whether we can crack higher. We come across the US market though, and the S&P 500 has actually already done this. Okay, so they've broken higher a couple of days ago, and we're suspecting that they're going to go a bit more from here, especially as they're coming into the reporting season. So this long-term trend is still very much in place. I can see that it's obeying this trend, coming in and buying the dips anytime it gets close to it, and driving higher. So what is driving these markets at the moment? The big thing, one of the bigger answers of that is the central banks. Okay, so we know we've got extremely accommodative central bank policy settings at the moment. Bond buying that's been going on for a bit now is still set to continue. We have no real end date from a Fed point of view. Most other central banks haven't really given us an end date either of when they're going to stop or start tapering bond buying. RBA though will do a small taper this year, but only a very slight taper just to see how things go. What we're waiting for really is a clearer picture on what the central banks are looking for to start tapering and give us a little bit of a plan. We suspect the Fed will continue to hint on a plan over the next few months, but at this point of time it's our view that we're not going to see any change in monetary policy setting for quite some time. The big thing really in the short term that you want to be looking at is US inflation. That's what I think a lot of investors are keeping their eye on right now. We don't want to see higher than expected inflation readings. Okay, so already, well, tonight we've got a reading out of the US, and at this stage they're expecting a 4% year-on-year CPI reading. So if we get something much higher than that, you might find the markets could sell off a bit overnight. Otherwise, if it comes in as expected or even slightly lower, that leads people to believe that the central banks won't adjust their settings, and therefore the market will likely continue to rise. The other big thing that's cooled markets down of recent is that China's growth has cooled a little bit, which really is starting to add a bit more proof that the inflation we are seeing and that strong rebound in economic growth that we are seeing is just transitory, right? So China reopened quicker than most other countries, therefore they're leading this post-COVID scenario, and therefore we can draw a little bit from the behaviours of their economy right now. So therefore, I think that's sort of eased a lot of investors' minds, and that's why we're starting to see the markets kick up a little bit more here. But nonetheless, if we see a much higher than expected inflation reading tonight, we can see definitely the markets pulling back. So we're just a little bit cautious coming into tonight's trading. Furthermore, tonight the US reporting does kick off, and we'll see companies like JP Morgan, we've got Goldman Sachs and Fastenal. So we'll get a bit of a taste of the banks. The banks of the US will continue to report this week. So most of the US banks actually do report this week. So look, that's going to give us a little bit of a feel on whether the financial sector's got more legs in it at this point. They've already had a fantastic recovery. The big thing for the banks as well in the US is whether they start buying back shares or not, and at what degree. That's what helped led them higher through QE 1, 2, and 3 after GFC. And we suspect they'll go back to those types of tactics as well in the coming years to help push their share price even higher. But yeah, US reporting, it's a particularly important time. It's usually a fairly bullish time for the market this time of year as well. We tend to go sideways through May, in June, and then we tend to kick up through reporting. We're already starting to see that move higher happen late last week, and we suspect as long as they keep beating earnings expectations, we suspect that the US S&P 500 will continue to track much higher from here. If we start seeing a bit of a reporting season where future expectations are lower and missing guidance, then yeah, it'll be the exact reverse, right? So that's why we're always a little bit cautious just ahead of a reporting season. And that goes the same for the Australian reporting season. Rio really kicks our reporting season off in the last week of July. Then we see the bulk of the market report through early to mid-August. So once again, it's going to be a very important time for the Aussie market. From a seasonal point of view, we tend to push higher through into the August reporting. Once we see all the companies report and their share prices adjust, then we come into that dividend period early September, sideways early September, and we tend to pull back a little bit actually towards the end of September, October, right? So that's your typical seasonal pattern. So at this point of time, that's why I'm pretty eager to see our market break 74. If we do break 74, that does also fulfill a flag pattern that suggests movement up to around 75. Okay, and with the seasonal pattern behind us as well, it does, puts a lot more emphasis on a bullish move right now. So, yep, guys, just wait for your breakout. Okay, there's no point trying to time or there's no point trying to guess when the market's going to jump higher. Wait for the breakout. Get on board. Everything is pointing up from a fundamental standpoint for us in the short term. So now we're just waiting for the market to also participate and start pushing higher. But really, there's not really much else to say about this market at this point of time. It really is centered around the central bank's monetary policy settings. Haven't mentioned Biden's infrastructure spending either. We know that's in the pipeline. I think that is broadly priced in by now. There might be a little bit more of a kick up when he gets across the line. But all the market wants to hear is more stimulus, more stimulus. When the market starts hearing that taps are going to be turned off, well, that might be another matter. So that's what you want to be keeping an eye on right now is the Fed meetings, economic data, and we don't want to see economic data too strong. We don't want to see economic data too weak. We want to see it come in broadly at expectations or close to. All right, I love yous and leave yous. Have a great week. Thanks and bye for now.